my name is Margus Sepp and I lead the trading department at Fastflow Finance. In previous discussions, we spoke about markets, information, and the importance of separating noise from opportunity. Today, I would like to continue that conversation from a different perspective. I would like to talk about understanding, more specifically why understanding often matters far more than prediction. One of the most common questions people ask in financial markets is very simple. What happens next? Where is the market going? What will happen tomorrow, next week, or next month? It is a natural question. People have always wanted certainty. We want to know what comes next. We want clear answers. We want confidence. And financial markets are full of people willing to provide those answers. Every day we see forecasts, price targets, predictions, opinions, scenarios, and confident statements about what is supposedly going to happen next. Some of these predictions will be correct, many will not. Because the reality is that markets are incredibly complex systems. They are influenced by economic conditions, technology, politics, liquidity, investor psychology, global events, and countless variables interacting with one another at the same time. No individual can consistently predict every outcome, no institution can eliminate uncertainty entirely, and no participant has perfect visibility into the future. This is one of the reasons why professional teams think differently. Our objective is not to predict everything. Our objective is to understand what is happening. Because understanding creates flexibility, prediction often creates attachment. When people become attached to a prediction, they begin defending it, even when market conditions change, even when new information appears, even when the facts no longer support their original view. Markets do not reward attachment. Markets reward adaptation. The better you understand the forces influencing a market, the easier it becomes to adjust when conditions change. And conditions always change. This is one of the most important lessons experience teaches. Markets are dynamic. They evolve continuously. What worked yesterday may not work tomorrow. What appears obvious today may look completely different 6 months from now. That is why understanding matters. Understanding allows you to respond intelligently. Prediction often encourages emotional reactions when reality fails to match expectations. Professional market participants spend much more time studying causes than making forecasts. They ask different questions. Why is capital moving? Why is sentiment changing? Why is liquidity increasing or decreasing? Why are institutions behaving differently? Why are certain sectors attracting attention? Why are some trends growing stronger while others fade away? These questions rarely produce simple answers, but they often provide much greater value than attempting to predict a single future outcome. At Fastflow Finance, we believe that strong decision-making begins with strong understanding, because when understanding improves, decision quality improves. And over long periods of time, decision quality often matters far more than prediction accuracy. Nobody predicts every market movement correctly. Nobody avoids every mistake. Nobody is right all the time. That is not how markets work. What matters is the ability to remain objective, to continue learning, to adapt when circumstances change, and to make decisions based on reality rather than expectation. As financial markets continue to evolve, information will become even more abundant, opinions will become even more abundant, predictions will become even more abundant, but understanding will remain rare, and that is precisely why it remains valuable, because in the end, successful participation in financial markets is not about knowing the future. It is about understanding the present well enough to navigate whatever future arrives. Thank you for your time, and I look forward to seeing you in future discussions.